State Street to deliver tokenized funds from 54.5T custody base. State Street, the Boston-based custodian that holds $54.5 trillion in assets under custody and administration, plans to deliver tokenized funds, according to an April 29th post from CoinMarketCap citing the firm. That custody base ranks State Street as the largest securities custodian in the world, ahead of BNY Mellon and JP Morgan. The announcement places one of the most conservative institutions in global finance squarely inside the on-chain fund market. State Street has hinted at tokenization work before through its digital asset division, but a public commitment to actually deliver tokenized funds, rather than study them, is a different posture. Custody scale is the gating factor for tokenization. Asset managers need a regulated custodian to hold the underlying securities that back any tokenized fund share. State Street already serves that role for traditional mutual funds, ETFs, and pension assets. Extending the capability to tokenize share classes means existing fund managers can issue blockchain-native versions without switching custodians. The market State Street is entering is small but expanding. BlackRock's BUIDL tokenized treasury fund crossed $1 billion in assets last year. Franklin Templeton's Benji fund runs on Stellar and Polygon. Both rely on third-party token infrastructure providers. State Street's entry suggests the custodian itself wants to control more of the stack, rather than license it from a fintech. Why $54.5 trillion is the headline number? For context, State Street's $54.5 trillion custody base is roughly equivalent to half of global GDP and dwarfs the entire crypto market cap, which sat near $2.6 trillion as of April 29, 2026, with Bitcoin at 77,257, 0.3% on the day, and Ethereum at 2326, so 1.4%. Even if a fraction of a percent of that custody base migrated to tokenized formats, the inflow would multiply the existing tokenized fund market by orders of magnitude. The number also frames the competitive picture. BNY Mellon, the second largest custodian, holds around $50 trillion. State Street, BNY, JP Morgan, and Citi together administer the bulk of U.S. institutional securities. Whichever bank moves first into tokenized fund delivery sets the format that competitors will need to match. How big banks are mapping the on-chain stack. State Street follows a pattern of traditional finance firms publicly committing to on-chain rails through 2025 and 2026. JP Morgan runs Onyx for institutional payments. BNY Mellon launched its digital asset custody platform in 2022. HSBC offers tokenized gold. Citi tested tokenized deposits with Wellington Management. The common thread is that custodians and clearing banks are positioning themselves as the on-chain equivalent of what they already are off-chain. Tokenization rewires the plumbing of fund administration, not the regulatory perimeter. A tokenized fund still needs a custodian, an administrator, a transfer agent, and a regulator-facing entity. State Street wants to be all of those things on-chain as well as off, including for stablecoin and money market exposures that currently sit in traditional wrappers. What the announcement does not yet say, the CoinMarketCap post, does not specify which blockchain State Street will use, when the first tokenized fund will go live, what asset classes will be tokenized first, treasuries, money market funds, equity funds, or whether any third-party infrastructure providers are involved. Until those details land, the announcement reads as a strategic signal rather than a product launch. The gap matters because the choice of chain, public versus permissioned, Ethereum versus Avalanche versus a private rail, often determines who can interact with the resulting tokens and what the secondary market looks like. A tokenized fund on a permissioned chain has very different liquidity dynamics than one on Ethereum mainnet. Most institutional pilots so far have begun on permissioned or hybrid setups before considering open chains. The other open question is fees. Tokenization promises faster settlement and 24/7 transferability, but the cost savings only materialize if custodians do not simply rebuild the existing fee stack on top of a blockchain. State Street has yet to indicate whether tokenized share classes will be priced differently from their traditional equivalents.